Is the S&P 500 about to tank? Alright, before we all start panic selling and stocking up on baked beans, let's zoom out. The S&P 500 is basically the 500 biggest companies in the US. And what do they all need? Energy, global trade, stable supply chains, and competitive pricing. Now, when tensions rise in places like the Middle East, energy markets get nervous. If oil and key commodities become restricted or more expensive, the cost of doing business rises. Higher energy equals higher transport costs, higher production costs, higher delivery costs. And guess who eventually pays? The consumer. If the consumer starts paying more, inflation can creep up again. And if inflation rises, central banks keep interest rates higher for longer. Higher interest rates means borrowing is more expensive, and business invests less. Consumers spend less, and the profit shrinks. And markets hate uncertainty. When risk increases, investors often move into safe haven assets like the US dollar. But a stronger dollar can also hurt the US companies that sell globally because their products become more expensive overseas. So why could the S&P fall off? History gives us context. During COVID, we saw around a 30% drop. During the initial tariff wars, roughly 25 to 27% drop. Markets dipped when fear arises. But here's the important part. Global events happen every few years. The market dips, it adapts, it stabilizes, and it moves on. Could we see a 10 to 15% correction? Absolutely. That would be normal in a macro uncertainty cycle. Will the market crash and burn forever? Absolutely not. But volatility creates fear. But volatility also creates opportunity. And remember, markets price in uncertainty, but they also price in resolution. So don't panic, stay informed, understand the macro, because when the dust settles, markets tend to find their feet again and begin to build.